Hey, you guys did it. Lots of likes and comments on Monday. Today, I'll show you Trading Strategy Guide's London Breakout strategy. Here it comes. Hi, this is Tim from TradingStrategyGuides.com. Okay, guys, listen very carefully. I believe that testing is one of the most important things you will do as a trader. It not only provides you improvements on your strategy, but it gives you the confidence to continue your strategy through drawdown periods. So I'm going to give you one last shot at getting this series on testing your strategies. If you like and comment on this video, I'll add the likes and comment numbers to last week's video numbers to get the total number I'm looking for on this. Make sure we get this done, guys. And yes, you guys let me know in no uncertain terms that you wanted to see the London Breakout strategy. Well, this is one strategy that has actually kept me up all night a few times. See, I'm an old guy and I like to get my sleep. But if I get wound up, well, all bets are off. I'll show you this great strategy shortly. I've also got a great setup on the tech stock Roku. But as usual, we've got a few charts to go over. Then later on, today's trading maxim. What day is today? Let's get it done. Remember to click the subscribe button and hit that bell so you won't miss any of these great camel memes. Let's look at the charts. The US dollar Mexican finally hit our target last week, right there. Waiting for the PSAR to come down, get below our current break-even stop so we can start trailing the stops. This is going to be a slow process since we're looking at weekly candles. The Euro Swissy is still looking good. My current stop is 107.89, locking in 105 pips. Looks like today's candle came close, but you know how we know it didn't hit the stop? Because the PSAR is still up there. Anyway, I just moved the stop down here as of about 8:30 New York time this morning. It actually came up to within a few pips of the level around 4 a.m. this morning. So we're still alive here with 105 pips locked in. And here's the nice thing. We survived a pullback. Hopefully now that this is pulled back and made this long wicky candle here, it will take another trip to the downside. We'll see. So gold is kind of like my son when he was 5 years old. Son, I told you not to touch that. I'm not touching it, Dad, with his finger poised millimeters from the thing. Gold is just hovering above our resistance level here. It could go either way. Hopefully it'll go up. But if I get a Friday close below this line right here, I'll shut this thing down. When the momentum is gone and it starts consolidating again like it may be doing here, it could explosively break either way. I don't want it explosively breaking against me, you know? The weekly Bitcoin bullish wedge setup looks like it's having a pause week right here. Pauses are okay. Just watch it. Platinum came very close to our stop on Tuesday, but it didn't hit it. And it didn't close below the support level here. So I'm holding and waiting on this one. Boston beer is looking really good, over halfway up to our target at this point. Hope you guys got some of this. We're looking for 394.86 for our target on this one. Boeing's financial situation is sad to me, especially since a large portion of the economy of our small Texas town here is comprised of a defense contractor that works with Boeing. But it finally triggered short on this descending triangle right here. I had to take it a little bit earlier in the day, so I didn't get as good a price as I might have if I'd waited later. I am in this at 311.80. First target of 304.14, and my stop loss is 324.29. One big caveat with this trade is this earnings statement that's due out on January 30th. Remember the issues I've had in the past with earnings statements gapping the price up or down and taking a much smaller profit on the trade, potentially taking a loss on the second half of a trade. I would consider shutting this trade down before the news comes out. We win by managing risk, and the risk on an earnings event is way high. Okay, it's time. Are you guys ready to see the London breakout strategy? Well, here it comes. If you've been around here very long, you're probably thinking, does Tim actually trade short time frames? Well, the truthful answer is, once in a while. You know, when I just had a great workout, or the coffee is especially good this morning, or I slept well last night, or, some other something. Mostly I don't do it because I have focus issues and can't stare at the charts for long enough to keep from missing a great entry or exit. But when a trade happens at a certain time of day, so I only have to focus for a short period, or it's something that I can set up in advance using pending orders, then I'm way more likely to go with it. I still think daily candles are the way to go and are taken more seriously by more big money traders than anything else. That's not to say that there's no money on shorter term setups though. Having said that, let's get into this London breakout strategy with a twist. The standard London breakout strategy, also known as the London daybreak strategy, has been around the block a few times. Everyone knows it, everyone's tried it with more or less success, and basically it consists of three elements. Number one, identify the range from which you will break out. Everyone has their own flavor of the LBS, and some of the modifications come from how you identify the range from which you'll break out. The rest of the setup is simply buy a break above that range or sell a break below that range. Well, as with most any strategy, the more people that do it, the more people are expecting the move. Then it becomes a race to get your entry in early enough so that you can actually profit from the setup. And there's the rub. Everyone is buying on the break of the range and no one is selling, so eventually there's nothing left to buy. The smarter money traders will stop trying to compete in that race and will wait for the race to slow down with all the earlier entry folks trying to get their profit, and will reverse or fade the breakout move by selling while the slower folks are still trying to buy. And there's the twist on Trading Strategy Guide's London breakout strategy. We're going to follow the smart money, which is always a good idea, and we're going to reverse or fade the breakout move. We're going to start like everyone else by identifying the range. As I mentioned, everyone has their own spin on how to identify the range. For me, I'm just going to use the whole Asia session, starting with the close of the US session at 5 p.m. New York time and continuing until the hour before the opening of the London session at 7 a.m. London time, which is 2 a.m. New York time. I like to look at that on a 15-minute chart, but you use whatever chart makes you happy. And I draw a line at the high and the low. That's your range. Now I'd like to insert this here. If you have an issue with time zones, here's a great resource that I use. It's called everytimezone.com, and it will help you with time zone conversions. You just find the time zone that you want to convert from. Let's say London, United Kingdom. Slide the slider along until you find the time that you're looking for. Let's say 8 a.m. London time, right there. Then you look up here to U.S. Eastern Time, and you'll see that's 3 a.m. Central Time, which is my time zone, 2 a.m. It's a really handy tool, and I'll be glad to put a link to it in the description below. Now, after we've identified the range that we're going to use, our next step is to look for a break of the range during the hour before the London Open. So this would be between 7 a.m. and 8 a.m. London time, or 2 a.m. and 3 a.m. New York time. If you don't get a break of the range during that hour, then no trade. Here's the example that we used, and it appears the break came a little bit early, but there is a retest of the level, and the break happens in that hour before London time opens. If you don't get a break of that range during that hour, then no trade. The next step happens during the hour after the London Open or after 3 a.m. New York time. Look for a reversal of the initial breakout of the range, like this candle right here. If you see this reversal, then enter the trade against the direction of the initial breakout. In this case, it's a buy. If you don't see this reversal by the end of the first hour of the London session, then once again you've got no trade. Your next step is to use your trade management technique to manage your trade at this point. As you guys know, I'll be looking for a stop loss of 1.5 times the ATR and a first target of 1 times the ATR. When the first target is achieved, I'll be closing half of the position for profit and following stops on the remainder. And lastly, if the price doesn't get back inside the original range by the end of the first hour, then close the trade at that point, profit or no profit, and move on. As you can see, the price has moved back inside the range within the first 30 minutes or so of the London session here. That's acceptable. Had price not moved back inside the range, then we would have shut this trade down, profit or no profit. And that's the London breakout strategy with the Trading Strategy Guide's twist. So what do you guys think of this strategy? You like it? You hate it? Let us know in the comments below. And click that like button below if you plan on trying this one out. Okay, time to take a look at the Roku Trade. Some of you may be saying, what the heck is Roku? And others are responding with, how can you not know about Roku? Well, Roku is a series of online media players or video streaming devices that are supported by a huge number of streaming partners providing source material. I've never had or used a Roku device, but I know those who would swear by their Roku. And a funny little tidbit, the name Roku comes from the Japanese word meaning 6, and was so named because it was the 6th company that Anthony Wood started. And Roku has been in a huge consolidation triangle since September of last year. There's been a steady decline in the volume and volatility during the whole period, with the occasional hiccup, of course. So I think the break of this triangle should be very explosive. This is another trade you could consider trading with options. And here's the trade plan. We'll buy a daily candle close above the triangle, or we'll sell a daily candle close below the triangle. Now on the breaking candle, we want to see the volume bar reach up to at least the volume average. If it doesn't quite reach the average, but does reach 75% of the average, I'll take a half-size position to reduce risk. You can calculate the percentage by dividing this volume number by this volume average, and you should get at least 0.75. If you don't get at least 0.75, stand aside on the trade. The stop loss will be 1.5 times the ATR, and the first target will be 1 times the ATR. So let's say this breaks to the downside, and you get a close right here. That will be your sell entry point. On that day, take a look at the ATR right here. Multiply that by 1.5 and measure that amount above your entry, and that will be your stop loss. And 1 ATR below your entry will be your first target. And of course it'll be just the opposite if it breaks to the upside. If after entering the trade you get a close back inside the triangle, I recommend that you shut the trade down right then and not wait for it to hit the full stop. Our intention is that a breakout of the pattern should be explosive and hit our target fairly quickly. If the momentum goes away, we want to shut the trade down without taking a full stop if possible. When the price hits our first target, we will close half the position for profit and set the stop loss to break even on the remainder. We'll then follow the stops as price moves in our direction until the market takes us out. Now, these two rules are the very definition of cutting your losses and letting your winners run. Typically I do this with 2 positions. The first position has a stop loss and a take profit. That position will close automatically when the first target is hit. The second position will only have a stop loss, and that's the position that will be allowed to run. When the first target is hit, we will have to manually move our stop loss up to break even on the second position. I will only risk about 2% of my account on each trade. And that's today's setup on Roku. Remember, my intent here is to tell you how I manage these trades. If you've already got a good trade management plan, use it. Things that work for me may not work for you. You have to understand your own mind to find the best strategies for your trading. And that's my intent for the trading maxims, to help control my emotional impulses and keep me on the straight and narrow path. A maxim is a general truth, fundamental principle, rule of conduct, or a proverbial saying. The purpose of my maxims is to motivate me to discipline in trading as well as other areas of my life. I suggest you start your own list of maxims, things that you can say to yourself while you're trading or doing life to make sure you always do the right thing. Feel free to borrow from my list. And today, Tim's trading maxim number 35. The markets can remain irrational longer than we can remain solvent. The actual author of this statement is in question. Sometimes it's credited to John Maynard Keynes, a well-known British economist whose ideas fundamentally changed the theory and practice of macroeconomics and the economic policies of governments. I've also heard it credited to Gary Shilling, a well-known U.S. economist, as well as a few others. In any case, how many times have you heard someone justify not taking their stop loss because price will always come back? Well, they're right, you know. I mean, they're right that price will always come back. It will most definitely be back at some point. But where will the price go in the meantime? And how long will it take to get back? Actually, we have no idea. How long will your account hold out? How much profit could you have earned with that account if you had just taken a small, reasonable loss on a failed trade setup and then had the money available for future trade setups? Think through this one very hard. A wise, successful trader doesn't do these things. So if that's your excuse for not properly maintaining your risk, you're going to fall flat on your face. How do I know that? Because I was that guy at one time. It's way less stressful not being that guy. Remember our daily Roku Trade plan here. We're going to buy a daily candle close above the triangle or sell a daily candle close below the triangle. If the volume is not quite average, go half size as long as it's at least 75% of the average. Your stop loss is 1.5 times the ATR, and your first target is 1 times the ATR. And remember to click the link below to the trade management video for more details. And also remember to sign up for my free Trading Picks email list so you don't miss any of these great picks. I send out about 3 or 4 trading picks a week from all different markets, and you'll get to see them first. And the best thing is, they're free. I'll put the link below this video. Be sure to come back to Trading Strategy Guide's YouTube channel every week on Monday, Wednesday, and Friday at 3 p.m. U.S. Eastern Time for my new videos. Don't hesitate to ask any questions you may have. I'll either answer your question right in the comments or in a training video, or both. And remember, the only stupid question is the unasked one. Also remember, it's your last chance to like and comment below if you want to get a series on properly testing your strategies. Remember, testing is not only about improving your strategy, but it's also about gaining confidence in your strategy to get you through the drawdown times. As always, thanks for watching, thanks for subscribing, and don't forget to hit the thumbs up below. Have an awesome Wednesday, and I'll see you next Friday.